I'm Mike Eppel in the 680 newsroom. Markets were pretty quiet today, maybe distracted a little bit by the solar eclipse event, or perhaps just the fact it's August. A lot of traders are away, and we've seen in the past, historically, the month of August is typically a slow month for stock markets, or currency trade, or commodities for that matter. All of them sort of wavered around break-even for much of today's trading activity. There is talk of positive economic spin-off effects of today's eclipse event, specifically in that path through the U.S., central U.S., from the west coast to the east coast, where the 100% coverage of the sun took place. There was an influx of hotel bookings and travelers into those viewing destinations, whether it was in Oregon or South Carolina or in Nashville. Some cases, hotel or Airbnb rates were up as much as triple what they were just a week ago. So we'll see if, in fact, that has any type of localized economic effect. We did see today IAC Interactive stock jump. That is the parent company of Expedia and Travelocity, and they could see actually help to their quarterly earnings from that event today. This week, big Canadian banks are going to be reporting third quarter results. That'll start on Wednesday when the Royal Bank rolls out the third quarter earnings. That'll be the first look at how the bank's earnings have been affected by the Bank of Canada's interest rate hike, which occurred in the third quarter, plus what the bank's things going on right now in the mortgage and housing market across the country, and whether or not just the low volatility on the financial markets that we've seen over the course of the summer has actually dampened the trading volumes and commissions for their brokerage services. The banks this year have not been the best performers for investors. The RBC is about the only one that's actually been positive for 2017 and only up by 1.5%. All the others have been money losers so far this year. More Foot Locker fallout, and is this again the Amazon effect? Foot Locker stock down again today. It's dropped over 30% in 2 trading days, down 55% year to date. The bricks and mortar retailer in the athletic wear business saw weaker than expected earnings late last week, and it has been affected by a lot of the big names, Nike, for example, starting to sell on the Amazon website. Is Fiat Chrysler a takeover target? Great Wall Motor Company out of China, which is the biggest SUV maker in that country, says it is looking to acquire Fiat Chrysler, if possible. Hasn't really started negotiations on a takeover, but really wants the U.S.-Italian brand for the Jeep and Ram pickup truck lines. That could be a big premium. Fiat Chrysler, no response from the company, but it has effectively been up for sale for the past couple of years. Was looking to do a merger with maybe one of its Detroit 3 partners, but didn't go anywhere on that. And a blast from the past. Volkswagen says it will be bringing back the VW microbus. The vehicle that was popular in the 60s and early 70s will be back for the 2022 model year, and this time it's going to be all electric. They floated this at various press events and auto shows earlier this year. They're going to follow through with that concept. VW by 2025 wants to make 1 million all-electric vehicles per year. From the 680 newsroom, I'm Mike Eppel for City News.